with our market panel. Joining us now is Schwab Asset Management CEO and CIO Omar Aguilar and CNBC senior markets commentator Mike Santoli. Good afternoon to you both. Omar, I'm going to start with you because we saw NVIDIA and some of the other semiconductor names sell off further today. We talk so much about the dominance of the Mag 7. Last week, we actually saw the equal-weighted S&P reach a new record, too. Safe to say we're seeing a pullback here, or is this really just a broadening out of the rally?
Well, this is a healthy broadening of the rally. I think when you put all together the macroeconomic, environment, meaning the decisions by the Fed, everybody's waiting about the CPI read tomorrow, with the fact that we're still that rotation towards energy, materials, financials, and small caps doing much better. You can actually see those are typical signs of the last phase of the cycles, starting in what the Fed wanted, which was that soft landing scenario they all dream of.
Yeah. And Mike Santoli, with the CPI coming in tomorrow, we saw what happened in February when that reading came in hotter than expected. The market sold off pretty aggressively on the heels of that. And that's really when you saw a bigger re-rating, a deeper re-rating within the bond market around anticipation of what Fed cuts could look like, pushing those out further into the year. Because that's already happened, is this a largely de-risked event tomorrow, or is it still spring-loaded for downside movement if it were to come in stickier and hotter?
Yeah, Morgan, I don't know if it's de-risked in terms of, the nuances of exactly when the Fed might start to cut rates. But I do think that the memory of the fact that even though the stock market had a little bit of a jolt when we did get that hotter than expected January CPI, it didn't exactly last, right? It proved to be just another one of these wobbles on the way up. So I'm not sure that people are acutely sensitive. Obviously, a big outlier number that really gets yields ramping and starts up the conversation of, okay, what's Powell going to say in the press conference next week after the Fed decision? Yeah, sure. I think that could provide an excuse for a market to have a proper little pullback. We haven't even had a 3% one, as I keep saying. So at this point, I think that there's enough in the forecast that say, okay, don't expect great things in terms of disinflation tomorrow. Would suggest we could take it in stride, but we have to see.
Yeah, Omar, if we do see inflation continuing to come down here and cuts that aren't happening until at the earliest potentially June, this is a situation where real rates are essentially increasing even as the Fed does nothing. How much does that matter to the market narrative here, especially as we do talk about the possibility of a soft landing?
Yeah, and I think that's a great question, because I think people forget about the effect of the real rates and exactly how the Fed is balancing out the fact that, looking at inflation trend, that despite, anything that we can expect from it outside of a big surprise tomorrow, the trend continues to go in towards what the Fed wanted. And as you clearly pointed out, the real rates continue to stay higher without any Fed rate cuts, which is in a way that tightening mode that we are already, which, allows, the economy to cool down, allows inflation to continue to have its trend. So in a certain way, depending on how the sources of this inflation number tomorrow, the Fed is in a great position to basically understand what the next move might be.